Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of technical analysis. Today we will go over some of the key technology stocks, notably Tesla, Shopify, and Amazon. I know that in the last few days the stock has been moving down, and so a few of you have asked me to do another technical analysis. So here it is. Note that the earnings season for these tech stocks are pretty much over, so there isn't a whole lot to look forward to in terms of the short-term catalyst, but we should still be able to look at chart and see the longer term and the medium term outlook for price targets. If you're new to my channel, please consider subscribing. I am a growth stock investor and a swing trader for technology stocks, and I'd love to share with you my investing and trading journey. Thank you, and let's get right into it. Let's start with Tesla. Tesla is currently trading at $660. At the time of this recording, we have about 20 minutes left before the trading day is over. And Tesla is struggling to hold on to the 50-day simple moving average this morning, but it lost. So 50 days SMA is at 682, but Tesla has lost that this morning. It is heading downward. If tomorrow Tesla cannot bounce back up to retest 50 days SMA, I think there's a good chance that Tesla might continue to go further. The next support on the daily level is 646, and then the next level would be 600 or $599 here. On the daily chart, one thing to note is that the gap between the 50 days SMA and the 200 days SMA, which is the white line and the red line respectively here, is narrowing. And at which point, if ever the white line crossed through the red line, we have a death cross, and that is a very bearish situation for Tesla. So far, daily chart does not look good for the bulls at the moment. Let's take a look at the hourly chart. On the hourly, Tesla seems to be dancing around $682, give or take, trying to bounce back, retest it a couple times over the last few days, but have not been able to maintain it. Tomorrow, the trading range is between $632 on the low side or $678 on the high side. Today, Tesla has bounced back a little bit from the low. The low was 650 this morning. And there is an RSI divergence. So it might very well bounce first thing in the morning up to 670 something and then go back down. This is a very bearish looking chart at the moment. Let's take another look at a 15-minute chart once again, just to kind of see the bigger picture. I see RSI divergence. I do expect Tesla to bounce tomorrow, but whether it can maintain the momentum, I do not know. So a few days ago, Tesla moved up pretty violently, up to $715, but it has not been able to maintain that. And it has since been consolidating right below 50 days SMA, which is not a good sign once again for the bull. Tesla needs to maintain above 200 days simple moving average to not be completely bearish. And if it loses $600, it is extremely bearish. For right now, I think that we can only take one day at a time, looking at the next support of $646 and see what's next. As far as events, we are only at the beginning of May. We have to wait until the end of June if we are looking at Q2 quarterly delivery results, which could be very upbeat. Rumors have it that Tesla already sold out for Q2, and currently it is just making production to fulfill such demand. So that is wonderful news. On the other hand, I think the FSD beta version 9 should be released within the month of May, according to Elon Musk. And so I think that could also be a temporary catalyst for Tesla. So far, we don't have major events going on for Tesla, so the downtrending looks to be here to stay unless and until there is a short-term catalyst on the upside. So as traders, right now, I am not holding any position in Tesla. I was bullish on this particular candle here, but Tesla was not able to maintain above 50-day simple moving average, so it looks bearish now. If Tesla loses 646, there is an opportunity for a bearish side trading for Tesla to go down to 600 and then 573, which is currently 200 days SMA. So I'll keep that in mind for a swing trade if Tesla loses 646, but for now I am holding on to just my shares, potentially add more. If Tesla ever gets to 573, I would definitely add more. And if Tesla loses 573 big time, I think that would be in an oversold condition and it would gradually move back up. We have a long way until we get there, so I'm sure we'll touch base again before then, but just keep those numbers in mind. Let's move on to the next one, which is Shopify. Shopify is trading at around $1,080 right now. It is having a head and shoulder pattern on the daily chart. It has a lot of gaps to fill on the way up, but for now it is sitting right below 200-day simple moving average. In fact, it lost 200-day simple moving average, and so that is not a good sign at all. The 50-day simple moving average also moving very close to the 200 days. Once again, a death cross could be in the making here. If Shopify does not go back up to 1100 and hold there, Shopify has way more downside to go. Shopify has a lot of gap on the way down and potentially go all the way down to $742. So keep that in mind, but the head and shoulder pattern is very clear here. One thing about Shopify though is that a lot of time it could defy technical analysis and it could move in a very weird way because it doesn't have a lot of volume. So it relies on a certain set of traders, institutional traders, or investors for that matter, to move the stock. And so just because it's head and shoulder doesn't mean that 100% it will materialize to the downside, but it does look to be more to the downside than upside at this point. On the upside, if it ever get above 1162, we can see that it can get back strongly to about 1200 and 1300 time frame, and it fills the gap at 1380. From last earnings, Shopify went up significantly and then pulled a dark cloud cover the next day. And as you can see, after that dark cloud cover, the stock has been moving downhill. So this is not good for Shopify's bulls, but this is only short term. In the long term, Shopify is still a decent company. It has high growth potential, but it also is highly volatile. It is heaven for day traders, but it is not necessarily good for conservative investors. On the hourly chart here, you can also see head and shoulder pattern, and it is clearly very bearish. I do see RSI divergence on the 1 hour chart, so it could potentially spike up tomorrow, similar to Tesla, but it probably won't be able to hold it. If it does hold above 1100, it could get to 1147, and if it does hold above 1162, that is a good sign for the bulls. Shopify in general is a good candidate for day trading, particularly in the morning when the stock moves pretty violently within the first half an hour, and particularly within the first 15 minutes. If you are correct in your chart reading, you could potentially benefit from Shopify, but Shopify is also not for the faint of heart. It is very difficult to trade and it needs perfect execution in order to have consistent profits. The third stock I want to analyze today is Amazon, and I want to start with the weekly chart. So as I mentioned time and again in my past videos, we do see a weekly bull flag for Amazon, and Amazon has been consolidating from July of last year. So that is roughly a year worth of consolidation. My weekly bull flag price target for Amazon is still $39.50 and $45.51, which is the longer term goal for Amazon. That said, the weekly candle for this week, however, is not very good. It is a bearish engulfing candle, although it is still sitting on the higher end of the weekly bull flag, so not all hope is lost. I do want to see Amazon getting back to $35.54, which was its all-time high, before it can spike to $39.50. I do think that's a matter of time, but Amazon can still bounce around $33.82 and $28.05, which is the upper and the lower end of the weekly bull flags, before materialize further. Moving on to the daily chart here, as you can see here, the 50 days and 200 day simple moving average is moving very closely together. And this is interesting because it has not formed a death cross. It has been moving in parallel with each other. This is also an inflection point for Amazon. If it does get out of this consolidation range, it will move big time. If it does not, it could potentially fall to the downside. On today's candle, however, it does look to be somewhat bullish, but overall, over the last few days, this candle is still weak in comparison with the last 4 days after earnings. So I would not be quick to enter calls at this point. I want to wait for confirmation, possibly tomorrow, before I enter calls. On the upside, I have resistance right now of 33.21, 33.82, 34.55, and of course the near all-time high of 35.43 or 35.54. Before we get there, there are a lot of hurdles for Amazon to go through. I certainly hope that Amazon will continue on the upside. I have a healthy position of my investment portfolio in Amazon, but as with all tech stocks, it can always correct, and it can correct in a big way. I wouldn't be surprised if Amazon get back to 32.04, which is only about $95 from here. So that's not hard for Amazon. It can achieve that within even 1 day. On the hourly chart, there's nothing much going on here aside from complete bearish, just moving down, bounce a little bit, moving down. This is a classic shorting the bounce type of trade here. However, on the hourly chart and hourly RSI, there's a big divergence here. So I do temporarily expect that this is the bottom for Amazon at around 32.60. If it does get out of this range, it could potentially spike back up. For Amazon to be bullish, it needs to stay above 33.82 for me to consider entering a bullish position. So this is it for this video. I hope you find the information helpful. I did want to jump on here for a quick technical analysis. Comment down below if you would like me to do more technical analysis for other stocks. Name those stocks and I'd be happy to do technical analysis for you. Other than that, enjoy the rest of your day and please come back for another technical analysis sometime this week. Thank you.